Hey YouTube, what's up? What's up? This is your UK yield farmer, and this is my channel where I talk about the most safest farm and the way to make money in the most safest manner. But having said that, I'm not a financial advisor. Please do your own research. And with that note, let's get started. Thank you. Today, I'm going to be talking to you about some of the basics of cryptocurrencies. Um, and why I intended to create this channel, who are my audience, right? So actually today, if you look at who are my audience, right? So there is a lot of hardworking people, and there are people who are like having full-time job today, right? Of course, I'm one among them, who are looking to make some of their investment into various portfolios, like who are looking at diversified investments, and who are looking to grow their money, who are looking to hedge against inflation. um, yeah, who are looking to see that what is my next, who are looking at what is my next value proposition, what is my next Amazon, what is my next Apple, right? How can I identify it? So I'm just one of those eager guys who's doing some research, and so I'm one of you guys. I'm one of you guys who have made some reasonable gains and want to multiply it, and look at a quick retirement, and look at financial freedom quickly. So if you're one among them, you're my audience, right? I'm not a full-time eel farmer, so I'm a part-time eel farmer. Someday I want to become full-time, but there has to be a start somewhere, right? And so I started this channel with the motive that I can inspire some of you guys or help some of you guys with the research which I do, and that's the whole reason for this channel. Okay, so again, some of my friends asked me, like, can you explain the basics before we get interested in in all of these. So today, you keep hearing different views on cryptocurrencies. If you ask people, like, you see people like Warren Buffett calling it a rat. Warren Buffett, Bill Gates, uh, Charlie Munger calling it right, a rat poison. But there are other set of people, like Elon Musk, or Cathy Wood, or Michael Saylors, who are like Michael Saylors, almost putting all of his money into cryptocurrency, particularly into Bitcoin. So who are saying that crypto is the future. So I'm neither of them. Of course, I don't have a money like them, but still I'm neither of them, right? But I certainly believe in this world, and I believe that there is going to be this world is there to stay, and it's going to bring a change, right? So I'm going to give my opinion, and after that, it's up to you to decide, what you want to do with your investments, right? It's your hard-earned money. It's you to take the decision, not your financial advisor. I'm your friend, right? So with that note, right, let me give you some basics, right, about centralization, decentralization. So when you hear cryptocurrency, the first thing, you keep hearing this word all the time, right? Decentralization. What is decentralization? Okay. For that, you need to understand what is centralization, right? Today, if you look at any bank, okay, it's a centralized entity, right? Any bank for that matter, JP Morgan, owned by somebody or a set of investors or a set of corporates. So you put your money, they use your money to multiply it. They give you a portion of it as interest. Sometimes they don't even give that. There are countries like Switzerland where they charge money to keep your money. There is a negative interest, right? So that is one form of centralization. Amazon today, it's a big company, right? uh, so who pockets all the money? Jeff Bezos, right? So it's a centralized world. Again, Microsoft, Apple, Google, whatever you want to call today, right? It's a centralized world. You use the platform, all of the money goes into the centralized world, right? Into one of these companies. Their profits keep growing up, right? But decentralization is just the opposite of it. Okay, so let me give you a simple example of YouTube, right? So YouTube is a platform run by Google, right? Like any other platform, right? So Google runs this platform. So if so what does Google do? The content creator creates the content, he uploads the content. Google does advertisements on the content, and they pay you a little money from the major money which they get. Like 98% goes into Google, and you get like 1 to 2%. I don't know whether this video will be deleted for saying this, but that's what it is, right? That's the fact. So tomorrow, I'm just thinking of it like, if I have a house and I want to rent out my house, I find a broker, and the broker rents it out to somebody, and that somebody pays me like, the rent, and in turn, what I pay the broker, I pay like 1%, 2% as brokerage. So today, uh, Uber or Google does the same thing for me. They do the brokerage. I'm the content creator. I create the content. I put the hardware. They run the platform for me. Nobroker.com or any brokerage firm, they act like a brokerage firm, right? They try to take the content to various consumers, and in return, ideally, I should be getting 98%, and the brokerage should be 2%, right? But it's the inverse which happens. So tomorrow, in a world, assume that a decentralized app exists, or a DApp exist, and this DApp will not be run by anybody. It will be run by a community, and so the community will share the profit with everybody and take a fees only to run the run or maintain the platform. So that's decentralization, right? Sounds interesting. So that's about decentralization, and that's what this it is all about. So what problem it solves? It solves the biggest problem of uh, creating many millionaires and not a few billionaires. Today you have a few billionaires, there could be many more millionaires. It it just narrows the gap between the rich and the poor. Decentralization. Okay, so that's my view. Anyways, right? So with that view, right, let's get started with what is cryptocurrency. And what was the Bitcoin was the first cryptocurrency which was created like what, like 11, 12 years before. I think it's 2010 or something. And when they created cryptocurrency, it was intended to amend a financial system. Today, in a financial system, the inflation keeps going up every month on month, inflation keeps going up because your currency is not is inflationary, right? It's not deflationary, it is inflationary. It is supposed to go up because they keep printing, right? And there is no limited supply. They'll keep printing, so the value will keep coming down. So Bitcoin, on the other side, is deflationary in nature. So which does mean that it is not going to inflate. There is a limited supply of tokens, and as the supply keeps coming down, the demand will keep going up. That was the purpose it was created. And then today you have the various, that is one form of cryptocurrency like Bitcoin or Litecoin, which is just a store of value. It's just like today, I would not say that Bitcoin is here to replace USD or anything like that, but it is one form of an asset class like gold, right? Bitcoin is like, I could compare Bitcoin only with gold, right? So today, why do you buy gold? Can you do anything with gold except ornaments? Nothing. You can just store it because it's a store of value, right? It doesn't do any real world use, right? I mean, of course, it's a metal. It could be anything, right? Somebody decided it was gold. There are much rarer form of metals than gold. So somebody decided it was gold, and gold became a store of value. So tomorrow it could be Bitcoin. That's how I see Bitcoin, right? Okay. So what are the other forms of cryptocurrency? There are thousands, like maybe, I don't know the number, but every day cryptocurrency is born, right? But there are a few of them which are like, which we call it as chains, or a smart contract based cryptocurrencies like Ethereum, like Cardano, Phantom, Polygon. What is the Polygon was, by the way, Polygon was invented by the Indians, so I'm really proud. It's one of the platforms which is standing about 10 billion today. Really proud. So what does these do, right? These are platforms on which on top of which you can write a application or a smart contract. So in a cryptocurrency world, we contact. Just give me a second, guys. I think I'm running out of my battery. Just give me a second. Sorry about that. So a smart contract or an application is like you're writing an application on top of it. These provide you platforms, and you write an application. There is a real world use case to it, and to use the to build the application or to use the application, they charge a small gas fees, which is like, which you pay in the form of a cryptocurrency, like Ethereum or ADA, Phantom, Polygon. These are here to stay. Terra, many more, right? So you have chains. There are some chains which have some real world utility. Tomorrow you can build a Uber on top of it. Tomorrow you can build a Google on top of it. There are already a few exist, right? So once it becomes mainstream, that's when you will see that, cryptocurrencies are going to these there will be a big adoption of these mainstream apps or dApps. There will be a killer dApp one day, right? And that day, cryptocurrency will swamp. Imagine a world of internet, right? In the 1980s, uh, where I grew in the 1980s, there was not much real world adoption until an application called email was found, right? After that, it swamped this world. I see that cryptocurrency or blockchain is here to do the same thing, right? There'll be a killer app on dApp. There'll be a killer dApp one day. Of course, there are a few already in use today, but in the financial world, it's giving handsome returns to people, which we will talk about in DeFi. But there'll be a killer dApp one day, and that day, it is going to swamp this world, and slowly, slowly, it will change the world, right? So that's what I think, is going to happen to cryptocurrencies, right? So as I said, right, so I've explained to you what is Bitcoin, why it is a store of value. Bitcoin, Litecoin, or some of the folks of Bitcoin, which I'm not a great fan of. If you're buying, just buy Bitcoin, right? Don't buy anything else. uh, okay, when you have the dad, why do you want to go to, small people, right? So let's go to the dad, right? So that's how it is. So let's so that's what is my thought process on cryptocurrency and what's going to happen to the crypto world and what is happening today, right? Okay, so this is so what has happened. I'm just reading through my slides, like, what has happened since the evolution of crypto, right? Okay. uh, if you look at, crypto can change your mind, and it could be like, you could very soon lose a lot of money if you're not really thinking, or if you're not really understanding what this is all about, right? So the as I said, the cryptocurrencies are today very volatile because it's in the very initial stage. So there'll be a day where you'll see that, a cryptocurrency has become 4 times in its value in a single day, right? It could have become like, from $2, it could have raised to $8. So if you become greedy and put a lot of money into it, it could come down at the same speed, right? So that's today it is volatile. So there is a lot of risk, and again, there is a lot of reward against it. So, but again, right? So that's why, it's the moment that's why it's very attractive as well. The moment it becomes very stable, right, there's no attraction to cryptocurrency, and that's the stage, where it will become very stable, and there'll be a lot of safe people trying to jump in. But you're not going to become millionaires over a day, right? I'm not, as I said, right, if you look, in my opinion, you should have a small portion of your money into crypto, because today, right, if you had thought of the opportunities which you would have missed in the past, right? There were stocks, if you there were stocks of Indian IT companies like Infosys, right, which have increased by thousands of percentage, right? Apple, Amazon, right? So they've all gone up by thousands of percentage. So it is almost like we need to, if you want to be in early, during those days, it would have crashed as well. I heard Amazon had crashed like 10 times slower as well. So there is a risk versus reward portfolio, right? So that's what I think cryptocurrencies are undergoing today. What the Amazons, the Apples, or what the stock market is a clear-cut example, right? If you had asked somebody in the 1980s, they would have said stock market is a gambling, right? But is it a gambling today? I don't think so. You are trying to validate a company if it is going to grow in value, and you're investing and you're growing along with the company. That's all about stocks, right? So sooner or later, once you understand the concept, if you're a believer, I think cryptocurrency is not a gambling again. But there is a high chances that you could lose all your money, or you could become a millionaire overnight. Yeah, but slowly it's changing. At least for Bitcoin, I see that it's slowly changing. So let's talk about the past, and let's talk about what is the future, right? The cryptocurrencies have existed since last, as I said, 10-12 years, right? Always people say that if you're an investor, in my opinion, you're never going to lose on cryptocurrencies if you're an investor, because it's the best performing asset class till date, which has existed on the planet. Okay. So if you're investing some money in crypto or Bitcoin, right? If you're investing in Bitcoin today, and look at it after 4 years or 5 years, you'll know that it's given you a handsome returns. But if you're going to invest it today and you look at it after 1 year, you could be looking at a portfolio which is like 10% of your total wealth. I have seen that. I have seen all my wealth getting into rubble, right? I invested some money in 2017 when the cryptocurrency was at its peak, and it was like it was reduced to rubble. But the good thing which I did, I never sold them because I'm an investor. Okay, I will never sell it. Will you sell your house? No, right? Will you sell an asset class? You should never sell your asset class. Even if Bitcoin becomes 100K, 1 million, 15 million, I'm not going to sell that, right? I'll tell you an interesting concept about that as well, right? About what Robert Kiyosaki talks about, was a rich dad and a poor dad. I've written it somewhere. Where did I write it? Okay. So the having said enough, right? So this is the past of cryptocurrencies. So anybody who has invested in Bitcoin in the last and looked at it after 4 years has never lost money. That is the history, and I think that will be like that for a few more years, right? Uh, there is no asset class which can give you a safety, right? For instance, anybody who invested in an Indian real estate market for the last 10 years has not made any money, right? So how can you even say that? In fact, it would have gone down in value. So how do you even say that that is a better asset class? Still, people believe in it because it's existed for years and years and years, right? That's what it is all about, right? So, okay. And one more thing which I wanted to tell you, I probably should have written it somewhere, but then I'll tell you. So I don't believe it's a gambling. It's a calculated risk, but you should not invest more than what you can afford to lose, right? I think it's the same with every investment, but with this kind of investment, yes, it's much more. You got to be much more safer. Rules don't apply to me. I'm just going all out on that, but still, it's my money. It's my hard-earned money. I'll do whatever I feel like, right? So that's what I'm doing today. Well, let me tell you about what a small example of what Robert Kiyosaki was talking about. I was listening to him about a rich dad and a poor dad, right? Well, today we all go to school. We are being told, we are being conditioned to go to school, uh, study well, get into a proper job, make some decent money, and put the money back to the bank. And what happens after that? You keep printing money, and my money value keeps going down. My inflation keeps increasing year on year. So my dad, who retired like 10 years before, would have put all his money in the bank, and today it will be worth like 50% or even 30% of its value, right? So that's how we have been conditioned, right? So I think we should look at how do we hedge our money. If you keep working really hard, and if you don't think about this, one day you are going to be the poor dad which Robert Kiyosaki is talking about. So we need to look at how do we keep hedging the savings which we keep getting, right? So again, I give the analogy of a asset class, right? An asset is something which, if you perceive that something is an asset, if your house uh, is an asset, right? So if somebody asks me, when will I sell my Bitcoin, I will never sell it. I'll never sell it, because if you have an asset, don't sell it. If you sell it, you're going to pay taxes on it, on your profits, right? You're going to pay taxes on your profit. Rather, what do the rich do? The rich uh, keep it as a collateral and take a loan against it, right? And when you take a loan against your collateral, you can probably, right, you can multiply the collateral, but still you're on loan, so you're not paying much of taxes as well. So that's what people do. I think rich Bezos, I think I think last year earnings was 4 billion or something, and I don't think he paid any tax, right? So that's simple, right? So if you believe in a project, if you believe in cryptocurrency, if you investing in something like Bitcoin, even if it is a small portion, never sell it. Don't panic. It will go down. It will keep coming up. But never sell it. Okay. Instead, what do you do with it? Right? That's something I'll talk about in the next slide on what is DeFi, and what is the beauty of this this financial world of crypto, right? So again, I've written how much exposure you need to have. People say at least you need to have $11 of Bitcoin for you to be, have a safe retirement. That's not much, guys. $11, because people believe that it's going to go 15 million. Some people say even more than that. Well, just buy a little bit, right? If you don't believe in whatever I'm talking, that's absolutely fine. Just buy a little bit and just keep it. Just buy a little and keep it. You never know, right? Tomorrow, what is going to happen? You're going to lose all, right? Or it's going to multiply 100 times. You never know, right? Just keep a little bit. That's what I've written as how much exposure you need to have to cryptocurrencies. Yeah. With that note, right, let me get into DeFi, right, or a decentralized finance. The basics of DeFi can be explained only by comparing it with the traditional banking. As I already told you guys, traditional banking, they make money through multiplying your money by giving it as a loan to different people, and by investing in various firms. So in the world of crypto, right, instead of somebody doing it or a bank doing it, you're doing it on your own. That's why the returns are very high, right? So for instance, right, you can if you have some Bitcoin, right, you can put it in some of the lending platforms, or you can consider it something like a bank, right? And you can possibly take a loan of USD or a USDT, which are stable coins, right, which never go up in value because they are always backed by a dollar. Their value will also be a dollar, right? So you take some loan against it and you start lending it to various people. Instead of, it's the same thing, you just compare yourself that you are a bank of your own, right? You take your own collateral, put it into your bank, get some money from that, and you start investing it to various places, right? You start investing it. So there are various options these days available with the cryptocurrencies. There are many DeFi platforms. So that's why I said I will never sell my Bitcoin, because today I have a Bitcoin with which I can multiply my money. I can keep it as a collateral, take some loan against it, and in a simple example, I keep my Bitcoin and take like 25% of loan against my Bitcoin. Right? 25% of the Bitcoin, I'll take it as a loan. I will take like USD, right? I will take dollars against it. I will start. I get it at like 4-5% in interest. I borrow it at 5% interest. So I invest it in places where I get 20%, 30%. I repay the 5%, keep the 20% for myself. That's it. In a simple, if I have to explain it that simple, DeFi is that simple, right? But there is a lot of concepts in it. There is yield farming. There is various other concepts. I think we spoke about rich dad versus poor dad, right? So okay, again, right, as I told you, I just want to cover a small portion on yield farming, right? So see, there are various safe lending platforms like Aave, right? If you have your Bitcoin, or if you have even USD for that matter, if you deposit it, they give you a percentage of interest, but it's as good as a bank. Why would I go to Aave, invest my dollars and get like 1% interest? I'd rather do that in a bank, right? So I would rather look at, as I said, right, I have some Bitcoin collateral. I'll put that Bitcoin collateral in Aave, get some dollars, and put it into some other lending platforms, which are like, or firms, or uh, or startups. You can think of it like startups. Invest in startups who are ready to pay me more. I'll put it there, multiply by my money. Rather, in this world, right, instead of giving you back in dollars, they give it as their own tokens, right? They give you their own tokens. So those tokens have some value in the market, which you can use it to, which you can sell it, or use these tokens to buy some other token. So you get yield after yield after yield, right? So in a simple terms, I put my collateral, I get some money, I put it into a yield farming or any other platform which will give me their own reward tokens. And they would have their own applications, right? Some of them have a use case applications, so they give you a part of their revenue in the form of these rewards. For instance, right, tomorrow, let's assume that Netflix has become decentralized today. Okay, Netflix has completely become decentralized. So I'll take my dollars, but Netflix wants money to grow. So they want USD. So I put my Bitcoin as a gold. Instead of gold, I put use my Bitcoin. Instead of a bank, I put it in Aave. I get some dollars. I give it to Netflix. I invest in Netflix. Netflix use their applications. And the application grows, keeps growing. They get a lot of revenue. They start sharing a revenue, part of their revenue to me, but not in the form of a dollars. They start giving Netflix own money, which is their Netflix printed tokens. And what do I do with them? Either I can cash it, close my loan, or I can take these Netflix rewards and go to Amazon Prime. Just an example. If they have all become decentralized and invested in Amazon Prime, give it to them. They give their own tokens. So you can keep doing that yield after yield after yield, right? It's not a Ponzi, guys. It's not a Ponzi. It's the growth of DeFi, which where it is like it's going up. But again, there are pros and cons with DeFi. The biggest con I would say is these smart contracts are susceptible to hacking. There are people who can hack your money, and you could have nothing. You could have all your money gone, right? So, and also there could be rug pulls, right? What if there is instead of Netflix, there is a Ponzi company, right, which asks for your USD or your Bitcoin, and they run away with it. There have been many in the past. So yeah, it's even in a traditional financial world, right? People promise you like 20% returns and run away with your money, right? So everywhere there is risk, but the rewards are very high, right? And I think I have made decent gains with DeFi, but I've lost a lot at the start because you see APRs like one followed by like 10 digits. You put your money there, and obviously the token price gets dumped, and you lose all your money. So you got to pick and choose, guys, and that's what I'm doing actually. I'll be posting more and more content where you have to play safe. My idea here is to not multiply your money by 10x or 20x. My idea here is to double up your money in the next 1 year. That's what I'll be looking at. If you get anything more, bonus. But I'll be telling you only safe things like Aave or Curve. Okay, and some of the risk. I'll be talking about risky yield farms, but then it'll not be super risky, right? I would have done some research. I would have seen they have been audited, and so that's what I would be talking about in this channel. So with that note, right, I hope you had some understanding. You got some idea about cryptocurrencies. What is decentralization? What is finance? What is crypto? What should you do with your money? So if it was useful, please click the like button, and also please share it with your friends. Subscribe. So honestly, I'm new to this world, right, of YouTube, so I haven't. I don't know that the common dialogues. So please do whatever you can. And sorry, I'm not going to invest a lot of time, editing my content and, making it beautiful. No, I don't have time for all this. I'm on a full-time job. So I'll be posting quality content. That much I can promise you. But yeah, I won't be making any edits or, any flashy uh, PPTs and, all those things. Even this was a little too much for me, but having said that, I've just done it for my friends. So thank you very much. Keep smiling, keep encouraging, and see you all in the next video. Until then, it's goodbye from your yield farmer. Thank you. Bye bye.